Hi there, Serial Trader here. Let's have a look at the major US indices, and this is as of after Tuesday's close. Alright, so since the last video, I did that on the weekend, so we've had 2 trading days since then. So last week, we ended the week with Thursday and Friday being, green days. So we had a little 2-day bounce there. Again, though, failing at the T-line as resistance. And then Monday, so yesterday we had a nice down day, which cooperated quite well with the wave count, having this minor degree 5 down for 1, and then we were working this corrective pullback for minor wave 2, and now expecting a decline in minor wave 3, which is part of a larger third wave down or C wave down. And at this point I'm leaning towards it being a third wave down. But yeah, so today's trading, nice gap down, and we broke the low of last Thursday there. So that was a nice bearish development, adding confidence. And despite some pretty extreme swings intraday, we still closed near the lower end of the range on the day, and the gap went unfilled. So this could be a acceleration gap, which typically occurs in a third wave where things start to really get going quickly. That's when markets move the fastest. If you see back here in this third wave of our initial wave 1 down, the third wave, we had a couple really large days of movement to the downside. So those 2 days represented a large portion of the range that took over a month. So if we're starting another third wave here, and this happens to be a potentially a third of a third wave, then we could really get going quickly, and we're off to a good start already. We've covered quite a bit of ground in just 2 trading days, and you can see we're nowhere near oversold on daily RSI. We also have a bear cross here on the daily MACD. So not only are the MACD moving averages below the 0 line, which means the trend is down, but the 12 period is crossing below the 26 period, so that's also a confirmation that we have resumed the downtrend, and you can certainly see that in the charts as well. Again, this only happens after the charts do their thing. It's just kind of a complementary indicator. All right, and I also like that now looking back. So in an uptrend, you like to see RSI get overbought and then pull back into the RSI bull market support zone between 40 and 50. Whereas in a downtrend, in this case the daily chart, in a daily downtrend, you want to see RSI get oversold, which we certainly did. In fact, we got extremely oversold. And then you want to see any pullback you have, or I should say corrective rally you have to the upside to kind of hit that bear market resistance zone on RSI between 50 and 60. And I believe we hit 56, so right in between the 50 and 60 bear market resistance zone. That was back here. So that's a nice RSI signature, just kind of again reinforcing that this is a downtrend. All right, well, with that being said, we can go on a little bit shorter of a time frame here, and let's maybe do the hourly chart for a little more perspective. So yeah, I like that we have a 1, 2, 3, 4, 5 down for 1. We had our second wave up here, a little ABC up for wave 2. I didn't label the ABC. I'd have to go in on the shorter time frame. In fact, I'll just take away this. We're just going to leave it to minor time frames at this point. The subdivisions clutter the chart up too much, unless we really go down on the 15-minute or something. Now, just to show the fib retracement level we did here. So we had our 5 down for 1. We came up and did just over a 50% retracement, which also happened to be a previous hourly resistance level, which, if I recall, was also a daily bearish engulfing candlestick invalidation level, and that all held, and we fell apart from there. So that was quite a nice setup there. Remove that fib zone, and now we're trending down in a third wave. So yeah, it's pretty clear here. Also, just a little slope analysis. So if you are working a third wave interpretation, it more often than not should be sharper in slope than the preceding first wave. Otherwise, it may just be a C wave if it's shallower. So here's the slope of the first wave. I'll take this off of here, and you can see that so far we're coming down in a sharper fashion, which adds confidence that this is a third wave coming down. See, I have to drag this over here to make the slope the same. So it's a steeper slope on our second decline here. So our third wave down is likely a third wave because it is sharper in slope. If it was shallower like this, then it'd be more likely, you know, an ABC down, and we might be looking to hold these lows, but that does not appear to be the case at all here. And that's probably good for this shorter term time frame, but at least short term, expecting lower prices. Any you know, bounces aside, and there certainly will be bounces along the way. On this daily chart, I also want to do some slope analysis. So if we take the slope of our first wave down here, okay, and if we drag this over here to where our third wave has presumably started, you can see again, even on the daily time frame, the slope, I have to drag this steeper to get to where we currently are as far as slope goes. So this is also adding credibility that we're in this larger degree third wave down, right? Okay, I'll get rid of that trend line. So moving forward, obviously we're looking to take out this low as a very initial target, which is right around that 2600 level, 2603, 54. So that should be taken out in short order. In fact, we've already taken out the equivalent level on the Nasdaq Composite, so that's probably an early indicator that it's coming on the other indices. But after that, we have the equality relationship, which I would view as a minimum objective, and that's just if this is an ABC down, which I think it's actually a 1, 2, 3 down. So the equality objective gets us down to 24.77.78. Before that point, we might run into some support on the February lows, which were 25.32. And then after that, we have the 618 relationship, 1.618 relationship at 22.69, so under 2300, which also happens to be right around the range. Now, if I go back here, I have this trend line drawn, these two significant support levels we had. I've just connected them, and this is based from based from our bottom in 2009. So the first significant pullback we had connected with the next significant pullback. So this is likely, you know, a large degree wave 2. This is a large degree wave 4, and then we went up and did our fifth wave, which had its own subdivisions. If I could just, I believe, label it like this, make it a little clearer for you. Okay. Yeah, this is what we're working here. So, or sorry, no, these are the smaller degrees, so that would be something like this. Okay. 1, 2, and then we had our 3, 4, 5. This is actually a larger degree, 1, 2, 3, 4, 5. So let me get that impulse tool out. So 1, 2, 3, 4, and then we had our larger degree. So above intermediate, let's do primary, we'll call it. So primary wave 1, primary wave 2, primary wave 3, primary wave 4, and then we finished off primary wave 5 up here, as well as intermediate wave 5. Now anyway, so connecting wave 2 and wave 4, so nice Elliott support line. Just coming down to merely test this support line that's been a nice level of support since the 2009 low, since we began our new uptrend there. Just coming down there coincides quite nicely with this 1618 level around that 2300 mark or so, in the zone anyways. So I just thought I'd point that out, not to get too far into that big time frame Elliott labeling scheme, but it's definitely worth looking at. And then also have this base channel drawn, so connecting the origin of wave 1 with the extreme of wave 2 in parallel off of the extreme of wave 1. And I'm just drawing that down. So if we do come down a third wave, we should actually penetrate the lower boundary line and break out of this channel. If we stay in the channel, okay, so despite the slope looking sharper right now than wave 1 and me currently working as a third wave down, if we stay in this channel and say we find support near the equality relationship, or say we even find support near the February lows and don't make the equality relationship, and we stay within the channel, then this would be more likely viewed as just an ABC down, and then possibly we're still going up in another impulse wave after that. But right now, that's not my favored count, but certainly willing to make the switch if the chart suggests it. But for now, looking more aggressively lower in wave 3 down, and that's minor wave 3 as well as this intermediate wave 3. So this could just be the smaller degree third as part of the larger degree third, but we'll have to see what happens. First step is definitely going to be breaking the October 29th lows, but again, we've already done it on the Nasdaq, so I think probably done viewing this wave chart here on TradingView for now. I think I've basically laid out kind of what I'm seeing and my expectations here. Now we'll go to the Thinkorswim candlestick chart, and here's the same chart, just on Thinkorswim, SPX candlestick chart. So yeah, nice gap down. 3T line, we're way below the 3T line, obviously way below the T line. All the moving averages are in bearish alignment here. We're not actually oversold yet on the daily oscillator, although we're about to enter that zone soon. 1 or 2 more days and we'll be in that oversold condition, although it could stay oversold and continue lower for a certain period of time. Oversold doesn't mean buy, it just means be watchful of some sort of reversal. Alright, and I just have some relationships here, like the 618 and the 1, and I think I did the 1618 down here of just this 1, 2, 3, 4, 5, okay? So just of the subdivisions of the larger, either wave 3 or C that we're working. Okay, and yeah, so this little head and shoulders pattern that people were looking at, this being, left shoulder, head, right shoulder, that's basically been invalidated at this point because we've gone too deep. So that bullish reversal pattern is basically out the window now. Okay, that's probably good for the daily candlestick chart here on SPX. And we'll go to the Dow Jones Industrial Average. And Dow Jones Industrial Average, nice gap down here as well. Quite a negative day. Not quite in the oversold condition yet, so further room to run. Definitely looking to take out the October 29th low here as well. And, the Dow, it's just mirroring. They're very correlated. I mean, you look at any of the 3 major indices here, and they're basically working the same pattern with some slight variations, but very much in line with one another directionally. All right, so that's kind of the next target to be looking at, is taking out the 24,122 or so level, and likely getting below 24,000 after that on the Dow here. Okay, we'll go with the Nasdaq Composite, and I think this one is a preview of what's coming on the S&P and the Dow. So we've I'll just get rid of this fib retracement because we're done retracing. Now we're working the next wave down. We've already taken out the October 29th lows on the Nasdaq Composite. So tech, the lead bear to the downside, just as it was the lead bull to the upside. Today we took it out. Very large intraday range, but this gap went unfilled. It was unable to close the gap despite a strong bounce attempt intraday. And then we closed down, lower end of the range of the day. Although definitely some dip buying. If I go with a 10-minute chart here on the Nasdaq, just to give you perspective, you see we had this nice gap down. They tried to buy the dip off the open, went down, made new lows. That was the low of the day at 68.30. And then very strong dip buying attempt, and then fading again towards the end of the session. So they're definitely trying to buy the dips here, but they just get slammed down. The selling is just overwhelming at this point. Obviously more bearish sentiment coming through than bullish. Okay. And yeah, daily chart here, the stochastics just starting to get into the oversold condition on the Nasdaq, although not actually oversold and certainly not giving any kind of a buy signal. It hasn't flattened out and started curling back up or anything. So further room to run here on the Nasdaq, and I believe I had some fib relationships here as well. Let's see here. Okay, so we already hit the 618 relationship between what we'll call wave 1 or A, and then wave C or 3. So that would be a minimum objective. If this was just an ABC, minimum target would have been that 618. So we just about hit that today, although I don't think it's going to stop there, and I don't think it's a C wave either. Coming down here, the equality relationship would be 63.60, and that would also break us nicely out of this base channel at this point that I've drawn for the composite. And then the 1618 relationship would bring us down to 56.12, and that's starting to get really, really bearish. You know, at that point, you'll have lost almost 3,000 points on the Nasdaq Composite from just over 8,000. So that would be significant if we get to that 1618 relationship, and that would also take us, you know, way below the February lows. Even the equality relationship gets us well below the February lows. So things to keep in mind as we move forward. It's not going to all happen in one day. There's certainly going to be bounces along the way, perhaps even significant bounces. And whether you want to trade those or not is totally up to you. If you want to take swing positions, I would currently be looking for bear plays, because that's just the path of least resistance, lower highs and lower lows. Until that changes, it's going to be easier to have bearish plays, because that's just the, you know, the trend of the market at the moment. Okay, that's good for the composite. And on the VIX, let's look at the VIX here. So VIX certainly responding, although not strongly yet. Intraday we got as high as 23.81 on the VIX. We closed at 22.48. So VIX is certainly still trending up, but we just haven't seen that explosion up yet. And I suspect maybe once we break the October 29th lows on the S&P and start having a little panic set in, maybe we'll take out this VIX peak we had, which was at 28.84. But for now, VIX still responding, still trending up as the market trends down. So we'll keep our eyes on this. If we get some sort of significant bottom, like a pivot bottom, maybe we'll be looking at much higher levels of VIX, just showing that capitulative selling that often leads to a nice, at least tradable low, not necessarily a lasting low, but a good bounce to pivot from. All right, that's probably good for that. And as far as my position, I'm still just holding the put back spread here on SPY. And intraday, I'm definitely playing with the futures. There's certainly good intraday opportunities on a 2-minute and 10-minute price chart. But I don't like to hold anything as far as that goes overnight. But I am quite comfortable holding the put back spread for a longer period of time because of the nature of it. Anyway, that's probably good for now. Serial Trader, signing off.